Have you ever wondered how successful investors like Warren Buffett made their fortunes? The answer lies in a timeless investment strategy called value investing. In this video, we'll explore the principles of value investing and how you can use it to make informed investment decisions. So, whether you're a seasoned investor or just getting started, get ready to discover the secrets of value investing. Value investing is an investment strategy that focuses on finding great companies with a strong financial foundation that can withstand market ups and downs. The idea is to invest in a fantastic company and hold on to it for a long time. But before investing, you need to do your homework. This means gathering information about the company's finances, management, competition, and more. Think of it like having surgery. Before undergoing surgery, you talk to your surgeon about the procedure, alternative treatments, and all possible outcomes. The surgeon provides you with information to help you make an informed decision about whether or not to proceed with the surgery. In value investing, you carefully evaluate potential investments by looking at the company's financial health, how it competes with other companies, and the overall market conditions. This way, you can make an informed decision about whether a company is a good long-term investment. Just like getting surgery requires a good understanding of the risks and benefits, value investing requires a deep understanding of the company's financial health and future prospects. In both cases, careful analysis and informed decision-making can lead to a successful outcome. When you're looking for a good company to invest in, you don't have to search hard. The easiest way is to think of a company that immediately pops into your mind. For example, when I say fast food restaurant, what's the first one that comes to mind? Or when I say phones, which brand do you think of? And how about search engines or online shopping? These companies are great because they have strong brand recognition, which means they're likely to stick around for a long time. So when you're considering which companies to invest in, it's a good idea to pay attention to those that immediately come to mind. They've already made an impression on you and many others, so they're likely doing something right. And with strong brand recognition, they have a better chance of succeeding in the market over the long haul. To find out if a company is healthy and has the potential to last long, the best place to start is by looking at its financial statements. Think of it like going to the doctor for a health checkup. The doctor will examine you and your test results to see how you're doing. Similarly, you can evaluate a company's financial health by looking at its financial statements. You want to see if the company is making a profit or a loss, as well as its solvency and liquidity. It's important to see if the company has sufficient funds to pay off its debts and how its assets compare to its liabilities. It's also important to track how the company manages its cash flow. By understanding these factors, you can make a more informed decision about whether or not to invest in the company. Stay tuned for future videos where we'll dive even deeper into this topic. I'll provide links to those videos in the description once they're available. It's important to remember that a healthy company can't stay healthy forever if it's not well managed. That's why it's crucial to take a closer look at how the company is being run. One great way to start is by getting to know the management team and their plans for the future of the company. Don't worry, the company usually provides this information from time to time, so keep an eye out for updates. It's also key to understand whether the board of directors is actively involved in the company's management. This can have a huge impact on decision-making and where the company is headed. And, of course, it's always a good idea to see if employees are happy and optimistic about the company's future. You can check this out by seeing how many shares they're buying in the company. We'll be diving deeper into this topic in future videos, so stay tuned. I'll make sure to include a link in the description once they're ready. When you go to the doctor, it's always helpful to know about alternative treatments. For instance, if surgery is recommended, you may want to know if there's a non-surgical option for your medical condition. The doctor will explain the risks and benefits of each available treatment so that you can make an informed decision. Similarly, when it comes to investing in a company, it's important to not only research the company you're interested in, but also its competitors. A company that outperforms its competitors is more likely to succeed in the long run. However, too much competition can also be harmful to the company, especially if you plan to hold onto your investment for a long time. Therefore, understanding the company's competition can be a valuable resource for investors. Have you ever gone shopping and thought to yourself, I really want this item, but it's just too expensive? I know I have. That's why it's important to consider the price of an item before making a purchase. The same principle applies when investing in a company. Before we can determine whether a company is selling at a good price, we first need to know how much the company is actually worth. This is called the company's intrinsic value. Think of it as the true value of the company, based on its potential for future growth and earnings. Determining the intrinsic value of a company requires projecting its future cash flows over its remaining life and discounting them back to their present value using an appropriate discount rate. While it may not be a precise figure, it's an important estimate to consider when making investment decisions. We'll be exploring this concept further in future videos, so be sure to stay tuned. Thanks for joining us today to learn about the basics of value investing. We hope that this video has helped you gain a better understanding of this investment strategy, and how it can help you make smart investment decisions. As Warren Buffett once said, while investing in stocks can certainly be lucrative, it's important to remember that the best investment you can make is in yourself. So, keep on learning and growing. We'll be exploring more specific topics related to value investing in future videos, so be sure to stay tuned for more insights and tips. Thanks again for watching, and we'll see you soon.